Hi, let's make a brief study on HAUP. This is the chart since the IPO back in 95, and the stock had this big bull move here in the technology bubble, and then it just went down to almost zero here, like most small cap technology stocks. And then it had some other interesting moves here over the short term. This from about 2.5 to 10, and then it traded sideways for about 2.5 years, and then another bull run. This more sustainable, but either way, now it is bearish. Look here. In fact, I bought it about here or so and sold it right there at the high. I was really lucky on this one. It was when Q4 earnings came out. People were buying on this gap up, but I've already seen the problem with this stock, so I took the opportunity to sell it down at 3 stocks on fire. And since then the stock came off a lot, about this is what, 40% down, so it's a good time to look at it again. Over the short term, we have this descending channel. The 50 days moving average is now crossing below the 200 days, so definitely this is a bearish chart. As for the fundamentals, checking my valuation model, we have the stock now at 5.5, initial share count 9.96 million shares. I consider there will be about 3% dilution a year. That has been the case for the past 4 years or so, so we'll get about 10.9 million shares in 2009. Initial revenue, this is the revenue we've got over the past 4 quarters, 104 million. Revenues have been rising steadily. Let's look here. Okay, this better. Okay, you can see that there were 42 million in 2002, 50 million in 03, 65 million in 04, 78 million in 05, 97 million in 06. So everything went well, revenue growth, but unfortunately the stock doesn't have a bright future, and at least with the current business model. I'll tell you why next. Revenue CAGR, I put here 20% because I usually put the historical average, which was 23%. There are no analysts' estimates, but there are many risks to this revenue increase, revenue expectation, because what HAUP does is little antennas so that you can get TV on your computer. The problem is there are already websites that allow you to do that. Look here, this is channelchooser.com. You can see news, information, TV on your computer here. Well, not with a high quality like the HAUP product lets you do it. But another problem is IPTV that is coming, and that has depressed the outlook for HAUP, because who's gonna need their antennas when the TV comes directly from the internet? But anyway, with this, let's consider the future will be like the immediate past, and we get a final revenue for 2009 of 180 million. Initial net profit margin, this is the fiscal 2006 net profit margin of 4.3%. This could expand to 5%, but there, as always, there has been some margin. How should I say it? The net profit margin isn't growing as much as revenues, and look here, our net profits. Look at this revenue jump from 78 million to 97 million, but gross operating profit rose just from 18 to 20 million, and EBITDA rose just 1 million. So the gross margin was declining, even though as revenues were going up, and that was a sign of problems. and but with this 5% net profit margin, it would get me $9 million in net income for 2009 and 83 cents per share of profit, with the earnings multiple of 23.7, which is the industry average. Let me just show you that. Okay. Just a second. Yes, let's look here. 23.7 is the computer peripherals industry average. The problem is the market maybe won't need these companies' peripherals anymore in the future. That's why the stock has been going down. But with this, well, if the recent trends were to continue, the stock would be very attractive, with a share price compound annual growth rate of 52% and an optimal selling price of 12.54. With the stock now at 5.5, this would be terrific. But there are technology challenges to these forecasts because of that IPTV and these websites that allow you to watch TV in your computer. So I would really like to know the company's plans to develop new products, or to what are they thinking about these technological challenges, because it doesn't matter much what they can do in terms of revenue growth and all, because if the market thinks the future won't be nice, it will depress the stock as it has been doing. But this is nice to keep on a watch list, and the catalyst for a bull run would be a new product, or if IPTV were completely abandoned, probably HAUP would rally a lot. So on a 1 to 10 scale, I'm gonna give it a 6. Thanks.